Welcome to the Property Code. I am your host, Nick. Today, we will discover whether buying rental property truly stands as a strong investment. Marcus was 32 and worked long hours as a software engineer. He had managed to save $15,000 and watched stock markets ebb and flow, but he felt uneasy about relying solely on equities. One evening, after a particularly stressful week, he found himself scrolling through listings for single-family homes. He paused on a modest house priced at $100,000 in a neighborhood with growing demand for rentals. Something clicked. He could use his savings as a down payment, secure a mortgage for the balance, and rent out the property. But he also knew every investment carried risk. He needed to understand not just the numbers, but the story behind them. He began by calculating his expected monthly rent of $1,200. His mortgage payment, taxes, insurance, and average maintenance expenses totaled $900. That left him with a positive cash flow of $300 each month. He realized that this cash flow would arrive reliably, month after month, so long as he maintained the property and kept tenants satisfied. Next, he examined leverage. By putting down 20% of the purchase price, $20,000, he controlled an asset worth $100,000. If the home appreciated by 5% in a year, the property value would rise by $5,000. Relative to his $20,000 investment, that represented a 25% return on equity just from appreciation, before accounting for cash flow and tax benefits. Marcus also explored tax advantages. He learned that mortgage interest, property taxes, repairs, and depreciation could reduce his taxable income. Depreciation alone allowed him to claim a paper loss of nearly $3,000 each year, thanks to IRS rules that spread the cost of the building over 27 years. This paper loss sheltered a portion of his rental income from taxes, boosting his after-tax return. He was aware of risks. A vacancy of a month or more could erase his cash flow. A major repair, a roof or HVAC system, could cost thousands. To manage these risks, he set aside a reserve equal to 3 months of rent and contracted with a local property manager who handled maintenance and tenant screening. He also planned to hold the property for at least 7 years to ride out market cycles. As a comparison, Marcus considered keeping his money in index funds. While the stock market historically returned around 7% annually, those returns were volatile and taxed at ordinary rates. Rental property offered stable monthly income, leverage-enhanced appreciation, and tax advantages that stocks could not match. Over the next 3 years, Marcus's rental property performed as he had modeled. He received steady cash flow, his tenants paid on time, and the neighborhood continued to appreciate at an average of 4% per year. When he refinanced after year 3, he pulled out some of his accumulated equity to fund a second rental purchase, repeating the process and compounding his results. From Marcus's journey, we learned several key lessons. First, positive cash flow provides stability and predictable income. Second, leverage magnifies equity returns when used prudently. Third, tax rules reward real estate ownership through deductible expenses and depreciation. Fourth, risk management through reserves, professional property management, and a sufficient holding period is essential to protect returns. If you are evaluating rental property as an investment, follow these steps. Estimate your income and expenses to confirm positive cash flow. Calculate your return on equity by modeling appreciation and leverage. Understand the tax impacts, including depreciation schedules and deductible costs. Plan for risks by establishing reserves and management processes. Finally, adopt a long-term perspective to smooth out market fluctuations. Buying rental property is not a guarantee of wealth, but for investors who perform diligent analysis, manage risks, and commit for the long term, it can become a powerful engine of cash flow, equity growth, and tax efficiency. Marcus's success offers a roadmap. Start small, learn the mechanics, and scale thoughtfully. Thank you for joining the Property Code. May your investments be deliberate, your returns rewarding, and your journey toward financial independence well guided.